John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hi there, my name is John Ulzheimer, and I am a consumer credit expert with 29 years of experience and counting in the consumer credit industry. I spent time at both FICO, the credit scoring company, and Equifax, one of the major consumer credit reporting agencies. Today I'm going to break a little bit of news for you and kind of explain why it's important and why it's so counterintuitive. So we're in the middle of the coronavirus pandemic. We still have issues with employment and people having their hours cut back or people being out of work because of the pandemic. So if I were to pose a question to you, ask you this question, what do you think happened to credit card debt in aggregate in the first quarter of 2020, which was kind of the front end of the pandemic? And then also, what do you think happened with credit card debt in the second quarter of 2020, which was smack dab in the middle of the pandemic? I think that if I asked you what happened to credit card debt, that many of you, if not all of you, I certainly would have gotten this wrong, would have suggested that balances on credit card accounts would have gone up because people were either out of work, people had their hours cut back, and so they would have needed to supplement their income or frankly survive somehow. And one of the ways that people do that when they're out of work, obviously, is they switch from depending on their income to depending on their credit card accounts. And so logically, you would think that because the unemployment rate spiked at the front end of 2020, that more people would be depending on their credit card accounts to help make ends meet. You, as I was, would be wrong. According to the Federal Reserve Bank, in the first quarter of 2020, there was a $60 billion, that's with a B, $60 billion decrease in credit card balances. Okay, fine. Q1, January, February, March, we weren't really in the throes of the coronavirus just yet, but now we have Q2, which is April, May, June of 2020. And so what do you think happened to credit card debt in Q2? The credit card balances once again decreased, but by more. And so $76 billion of credit card debt was paid down in Q2 of 2020. That data is also according to the Federal Reserve Bank. So first off, that's very counterintuitive. You would have expected, I think most people would have expected credit card debt to go up, not to go down, and also go down at such a sharp rate and in such a large amount. $136 billion of credit card debt was paid off, or the balances decreased through the first two quarters of 2020. So why do you think this is happening? Now that we understand that this is happening according to the Federal Reserve, why do you think this is happening? I think there's a variety of reasons or answers that you can give to that question about why. Why do you think it's happening? Why such a dramatic decrease in credit card balances? I think number one is the timing. I think at the beginning of the year, Q1 and Q2, it's right during tax season. And I think to some extent, consumers are using tax refunds, like they often do, to pay down debt. And so it is not inconceivable that someone who got a tax refund earlier in 2020 is using that tax refund to pay down their credit card balances. All right, that's a no-brainer, and that one really would apply almost every single year because people who get tax refunds, you could get a tax refund every single year that you're filing your taxes. I think there's a couple of other reasons that are really localized to this point in time in our history given the coronavirus. Number one is the stimulus bill. The coronavirus stimulus bill that was passed that many people got checks in the mail for thousands of dollars, and it's not inconceivable that people who did get those checks are using that money to pay down credit card debt. Certainly a very smart way of using that money because now you have what's called open to buy or more available credit on your credit cards should you need to use that credit limit for emergency purchases. And then the third thing is I think that the coronavirus and being out of work or having your hours reduced is forcing consumers to become more fiscally responsible with respect to the use of their credit cards. And so consumers understand that credit card debt can be very expensive. Frankly, for most of you watching, credit cards are going to likely be the most expensive debt that you're ever going to service because the average APR on a general use credit card is in the 17 to 18% range. And the average APR stands for annual percentage rate. Some people call it the interest rate. The average APR on retail store credit cards, so the ones that have actually a brand of a store on the card, those APRs tend to be into the 20s. And so credit card debt is very expensive to service if you are carrying those balances month to month. So I think the coronavirus issue has forced people to become more fiscally responsible. So if you add that on top of the coronavirus stimulus money that many of you have received, on top of tax refunds that some of you have received, I think the aggregate of those three things is really, it helps to explain why we have seen such a precipitous decrease in credit card balances in the first 2 quarters of 2020. So why do you care? Why is this important to you? Well, there's a couple of reasons. First off is the interest cost. As I said, it's very expensive to carry credit card debt. And so to the extent that you're not paying a credit card issuer 18% APR, 22% APR, and that money is being redirected either to pay off other debts like student loan debts or mortgage debts or auto loans, then that's fantastic. Also, to the extent that you're using that money to just build an emergency fund, or if some of you who are smart invested it in the stock market in early 2020, around March, April of this year, you have seen dramatic increases in the value of that money if you had the wherewithal and the foresight to invest in the market when it was at its low in March, April of 2020. So you've seen that money grow a lot since then. So congratulations if you're one of those people, and drinks are on you next time we go out together. Another reason why this is important is because credit scores. Your credit scores are highly influenced by the credit card debt that appears on your credit reports. There's a very important ratio in FICO and Vantage Scores credit scoring systems called revolving utilization. Some people call it the credit utilization ratio, but the actual formal name is called revolving utilization. It's essentially the relationship between your credit card balances and your credit limits expressed as a percentage. So if you have $5,000 of credit card debt and $10,000 of credit limits, 5,000 divided by 10,000 is 50%. Your revolving utilization ratio, or the percentage of your credit limits that you're currently using, is 50%. So that percentage is actually very influential. You would like that percentage to be absolutely as low as possible. Optimally, you'd like that percentage to be less than 10%, because that's really the optimal percentage for both FICO and Vantage Scores credit scoring systems. It doesn't necessarily have to be at less than 10% for you to have great scores, but if you really want to max out your scores as high as you can possibly get them, then you're going to want that percentage to be lower. So that's another practical benefit of having lower credit card balances on your credit reports, in addition to paying either no interest or less interest, but also the fact that your credit scores are going to maintain strong, assuming that you don't have other score damaging related issues with respect to your credit scores. So again, congratulations, US, for paying down such a massive amount of your credit card debt. I hope you reap the benefits of doing so, and I hope you're staying healthy. Thanks for watching. Have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.